So what do we see? We see an industry that's growing from 2 trillion to 200 trillion.
Bitcoin is going to 200 trillion. Smash the like button if you agree with me. If you disagree with me, watch this video because Michael Saylor, Treasury Secretary Scott Bessent, and Wall Street's Scott Edelman all just made the case why you need to invest in Bitcoin and crypto in 2025.
What is the argument that crypto should be a part of your overall investing portfolio, and how much?
In fact, you're making a huge mistake if you don't do this. So make sure you watch today's entire video, as this year could be your last chance.
Can you quickly explain how important it is for America to take the lead here, especially as we see China leaping ahead?
And again, this isn't just coming from me, Aaron at Altcoin Daily. It's very interesting to see how Michael Saylor, Scott Bessent's, and Scott Edelman's theses around Bitcoin and crypto, how they're the same.
We believe that the United States should be the premier destination for digital assets.
And how they're different.
Well, if I can add a new basket, if I can further diversify my risks to protect myself on the downside while preserving my potential for upside, why wouldn't I want to add the newest asset class, the first one to be invented in 170 years?
And of course, it's very interesting how all of this falls on the backdrop of the FOMC meeting today. Fed Chair Jerome Powell says that the Federal Reserve is not in any hurry to lower interest rates and will wait to observe the effects of President Trump's tariffs before taking any action.
I don't think we can say, which way this will shake out. I think there's a great deal of uncertainty about, for example, where tariff policies are going to settle out, and also when they do settle out, what will be the implications for the economy, for growth, and for employment. I think it's too early to know that.
Now, don't panic. Things are about to play out like this. Well, at least according to macro expert Dan Tapiro, he writes, tariff uncertainty is expected to dampen China's growth prospects. The Bank of China cuts rates to 1.4%. Tariff uncertainty having the same growth dampening impact on the U.S. If the U.S. slows hard and the Fed cuts rates to 1.4%, 250 basis points from here, imagine how high Bitcoin would go in that scenario. 200K plus. Because it's very interesting, at the same time that all of this is happening, Treasury Secretary Scott Bessent is in front of Congress explaining to them why the U.S. needs to become the premier destination for Bitcoin, crypto, stablecoins, and all digital assets.
Can you quickly explain how important it is for America to take the lead here, especially as we see China leaping ahead?
Yes, sir. We believe that the United States should be the premier destination for digital assets, and as members of this committee and the Senate are attempting to do, create good market structure around that so that U.S. best practices are used around the world.
And that's really the point, right, is having American U.S. best practices to sort of set the pace for others to follow rather than us trying to fill in the holes that others that may be created as others set that pace.
Yes, sir. And also that digital assets are an important source of innovation that can drive usage of the U.S. dollar around the world, as with stablecoin legislation. There is speculation that there may be up to $2 trillion of demand over the next few years for U.S. government securities from digital assets.
Michael Saylor continues to explain to corporations why they need to put at least some Bitcoin on their balance sheet. The U.S. dollar continues to get devalued, while Bitcoin is on track to go to 200 plus trillion.
So what do we see? We see an industry that's growing from 2 trillion to 200 trillion. When Bitcoin is a $200 trillion asset, what is it? Okay, well, it's still going to be smaller than equity and real estate and bonds. It's just going to be noticeable. It's the emerging global monetary asset. It is digital gold. It is 10 times better than gold, maybe 100 times better than gold. And it is the most powerful, secure computer network in the world. You don't want to miss the next wave.
And this snowball effect is really growing because while it used to be only Michael Saylor putting Bitcoin on his balance sheet, today there are plenty of many corporations, I think 70 plus, that are actively buying Bitcoin for their corporate balance sheet. MetaPlanet is one of them. Here, the MetaPlanet CEO says he thinks this is just the beginning of a tidal wave.
We were inspired by strategy and began the execution last year. And now, certainly in Asia, we're being approached all the time by other companies looking to have conversations, looking to understand the playbook, looking to understand what the pitfalls might be, how to explain to their boards, who to surround themselves with to ensure that there's an easier path forward. And so I think this is just the beginning. This is perhaps in the Japanese context, say, the beginning of the tidal wave of more and more corporations around the world adopting Bitcoin. I think it'll be irresponsible for companies not to look at Bitcoin and not to purchase Bitcoin on their balance sheets. And time will tell which ones are the ones that come to the table last.
5 trillion Fidelity at this same Bitcoin for Corporations conference, explaining why Fidelity thinks it's a good idea for corporations to put some Bitcoin on their balance sheet. Amazing that this is coming from Fidelity.
Shareholder value. And then you compare this to Bitcoin. Average annual return last 5 years, 65%. So the question to companies out there is, number one, what's your return on invested capital? Have you calculated it? How does that compare to your cost of capital? Are you generating shareholder value? Do you have extra cash? And if so, what are you doing with that extra cash? And then the ultimate question is, what's your current opportunity set? What are the investment ideas and opportunities that are in front of you? And do you think or do you believe the return on those ideas or opportunities will exceed the opportunity cost of Bitcoin? Thank you.
And Strategy's CEO says that they have big plans this year and next year to continue to be at the forefront, helping other corporations figure out what they've already figured out. They want to write the premier book on all of this.
We're going to, over the course of the next few months, publish a BTC standard model. Like we did last year, we published a Bitcoin model in 2024. We're going to publish a model and open source it, share it on GitHub and other places, so that you all, if you're interested in understanding how Strategy thinks about our investment decisions, you can start to build your own strategy models. But more importantly, as other companies adopt a BTC standard, they can start to have models and tools too. And we are extremely appreciative and understand the responsibility of being the first and largest Bitcoin treasury company. When we see companies adopt some of the BTC KPIs that we've established, MetaPlanet, who you heard from yesterday, Cooler, who you heard from yesterday. So that's the reason we want to publish this model, is so other companies can start to adopt it like they did the BTC KPIs. And probably most important for all of you is we need to educate folks. The Principles of Corporate Finance, written in 1988 by Stuart Myers, needs to be updated. And it needs to be merged with the Bitcoin standard, that was written in 2018. We need a book on the BTC standard, right? We're writing the book as we go along. I think it's going to be the book that people will read and teach 20, 30 years from now. And it's exciting to be sitting here talking about the future of finance.
So corporations, nation states, Wall Street, everybody is waking up to the fact why you need to invest in Bitcoin and crypto in 2025. Here's how they explain it on Wall Street. Before I play you this video, make sure you subscribe. Bitcoin won't be under $100,000 forever. And when it blows back over 100K again, we will be leading the way. We are the #1 crypto YouTube channel on the planet. Subscribe to Altcoin Daily, join our team, and listen now to how Wall Street is selling you Bitcoin and crypto. There's similarities and differences compared to how Michael Saylor talks about Bitcoin to corporations, compared to how Scott Bessent talks about digital assets to Congress. Either way, the message is clear. Bitcoin and crypto are about to go a lot higher.
What is the argument that crypto should be a part of your overall investing portfolio, and how much? I know it depends on age groups, but give some advice. What are you telling your clients now?
Well, I'll give you two pieces of this. Number one, Bitcoin clearly over the past 15 years of its existence has been the best performing asset class in history, bar none. It is widely expected to continue that track record over the next 10 years. So on an attitude of trying to create wealth long term, crypto makes a lot of sense. Second, most importantly from investment advisors' perspective, Bitcoin's price movements are independent of all other asset classes. The prices don't move in sync with stocks or bonds or real estate or gold or oil or commodities, and that makes it a perfect addition to a diversified portfolio. If you engage in rebalancing, which all investors ought to do periodically, owning Bitcoin helps to lower the risk of the portfolio while improving the returns. A risk-adjusted profile is one of the big claims to fame of adding Bitcoin to a diversified portfolio.
It's really the big claim for adding to anything. I mean, why do I need a new asset class? Okay, I have stocks, I have bonds, I have a nice fund for short-term money. I have a money market fund, and I have a little bit of gold. Why should I add Bitcoin? Your point is diversification, lower volatility, potentially adding to returns. Those are good reasons.
That's all there is to it. In other words, if you believe in modern portfolio theory, if you believe in Harry Markowitz and his Nobel Prize-winning research that says investing is as much about risk as return, we want to manage that risk. We want to diversify so that we don't have 12 eggs in one basket. We have 12 eggs in 12 baskets. Well, if I can add a new basket, if I can further diversify my risks to protect myself on the downside while preserving my potential for upside, why wouldn't I want to add the newest asset class, the first one to be invented in 170 years? Last time we had a new asset class was the discovery of oil in the 1850s. This is a wonderful opportunity to further improve the diversification, and all the academic data tells us.
And what percentage are you advising at this point?
Most are recommending in low single digits, 2, 3, 4, 5% allocations. But if you talk to people who are deep into crypto, they're doing between 10 and 40% allocations to crypto.
Yeah, so it's a lot of risk there. Considering the volatility of crypto, it's a lot of risk.
If you recognize the investment potential, you recognize the value of rebalancing, and you can afford the volatility in the long term, it can make a lot of sense.